Good afternoon, friends. Welcome to this webinar on GST. So, are you ready for GST? In this e-learning series, we will first of all understand introduction and then registration in GST. If we look worldwide, GST is not a new concept, though for India it's a new concept. If we look to the world, France was the first country where it was introduced in 1954. So a lot of time has passed since then. And thereafter, many countries, almost 160 countries, have already implemented GST. At some places, it is also called VAT. And most of these countries have a unified GST. A unified GST, that's a single GST, but in India we have a federal structure, and there that is why, because states are also powerful, center is also powerful, they do not want to lose control. That is why we have a dual GST, like the model which is being followed in Brazil and Canada. But obviously India is a very complex country, and that is why the structure is not as simple as in Canada or Brazil. It is much more complicated, as we'll understand in due course. Regarding the rates, one of the highest rates is in Gambia, which is 40%. Then another high rate country is Hungary, which has a rate of 27%. But in several other countries, the rate is below 2 digits. Back home, closer to home in Malaysia, it also, where it was introduced only in 2015-16, it is 6%. So this is something about GST worldwide. Now, history of GST in India. Do you really want to know that? Don't you already know too much about that? You've read about it, you've seen, and in every day you are reading in newspapers, etc. So we'll rather skip it and just move on to the other concepts, important things. Now, to understand the concept of GST, let us understand what were the problems before GST or even existing case. There were multiple taxes. We know there's excise, there's VAT, there is service tax, there is custom duty, so many taxes, so multiplicity of taxes. And these multiple taxes or multiplicity of taxes resulted in complexity. Rather than having a simple structure, taxation structure, we were having a complicated tax structure. Then what else? Cascading effect of taxes. Every now and then you might be hearing this word, cascading effect of taxes. What is it? Tax on tax. We are aware that in many cases tax is being charged, and there are like excise duties being charged first of all when the manufacturer is making a product. Thereafter that is being added, and then VAT is being calculated not only on the basic price but even on the excise duty. So this is tax on tax, which should ideally not be there. And there are multiple taxes on single item. We are aware that in the case of software, excise duty is also applicable and VAT is also applicable. Similarly, when you go to a restaurant, there even you have to pay VAT, you have to pay service tax. So multiple taxes on a single item, because in many cases the department itself or the government is not clear whether it is a product or a service, and we as consumers end up paying both taxes or multiple taxes in these cases. And then limited availability of input tax. For initially for excise, the excise benefit was there of inputs used. Similarly, in the case of VAT, the benefit of input tax paid on input services, that was available only for VAT. But then later on for excise duty and service tax, the benefit was available both for excise duty and for service tax, but the same was not available for VAT. So all these were not, the benefit could not be used for all the taxes across the spectrum of taxes, as it were. So in GST, what has changed? Let us see. In GST, earlier we had these multiple taxes: entry tax, entertainment tax, custom duty, service tax, sales tax, VAT or CST, and excise duty, and several other taxes also, obviously, as you are aware. What has happened in GST? Most of these taxes have been subsumed in GST. instead of all these multiple taxes. Obviously, custom duty is not going. The basic custom duty will be there, but other taxes, other duties, SAD, CVD, they will be subsumed in GST. Similarly, service tax, excise duty, entry tax, entertainment tax, all these state government taxes and central government taxes will be subsumed in GST. Some taxes will not be subsumed, like the taxes being levied by the local bodies. They will continue to be levied as this in the present scenario, but most of these taxes that we have just now talked about, they will be shifted to GST. A single tax will come. Then off and on you might be hearing that GST is a destination based consumption tax. So what is that? Obviously, consumption tax already, this service tax, VAT, they're all consumption based tax because they have to be borne by the ultimate consumer. But what has changed? Earlier, the tax was being levied at the source. The revenue was being obtained by the state where the origin of the product was there, wherever the manufacture was there, wherever the service was being provided, or wherever the item was being sold. Now, GST is a destination based tax because this will now be the revenue of the consumption state. Wherever the final consumption is taking place, it will be revenue of that state. So coming to the broad constituents of GST, what are these? Let us see. GST consists of when we have an intrastate sale, that is sale within the state, that is an intrastate sale. It has two components, CGST and SGST. So both these taxes will be levied whenever there is a sale within the state. And if it is an interstate sale, that is sale between two states, let's say Delhi and Haryana, then it will be interstate sale. And in this case, only one type of tax, that is IGST or integrated goods and services tax, will be levied. Regarding cross utilization of credit, in the case of a sale within the state, how it will happen, let us see. If there is some input credit of CGST, you will be able to use it for output output tax of CGST. Then for CGST, if some output tax is to be paid of SGST, whether you can use it, the input credit of CGST? No, it is not possible. Then for SGST, obviously if some input credit is there, that can be used for SGST output tax which is to be paid. But as in the case of CST, if there is some input credit of SGST, it cannot be used for output tax liability of CGST. So that was within the state scenario. Now coming to interstate sale, supply of goods and services. Here the tax being levied will be IGST or integrated goods and service tax. This will consist of two components, CGST, Central Goods and Service Tax, and SGST, the relevant state goods and services tax. The two will be combined to become integrated goods and service tax, that is IGST. It will be collected by the central government, but it will be broken into two parts. The CGST will be retained by the central government and the SGST of the relevant state will be transferred by the central government to the relevant state government. So that was interstate supply. In the case of interstate taxable supply, how the cross utilization of credit will take place, let us see. The tax being levied will be IGST, as I already told you, and if some input credit of IGST is there, it can be used for the output tax liability of, first of all, IGST. This sequence has to be followed. If some input tax credit of IGST is there, first of all, it can be used to pay the output tax liability of IGST. If some amount still remains, then it can be used for the payment of output tax liability of CGST, as both belong to the central government. And still, if some amount remains, then that can be used for the payment of the relevant SGST or the state goods and services tax. So IGST can be used across the scenario. For IGST, CGST and SGST output tax liability. whereas it is not the same in the case of CGST and SGST, as just now we saw in the case of the sale within the state. Now coming to the tax rates and GST, not finalized yet, but as per the reports, as per the newspaper items, what is being told to us is there will be a standard rate of around 18 to 20%. Then there will be a special merit rate, which obviously will be lower for merit goods and services like pulses, like food items, etc. That will be around 12%. And then there will be a special rate for precious metals, gold, silver, etc. Maybe around 1 to 2%. And then there will be a much higher rate of around 40% for demerit or sin items like cold drinks, like tobacco, etc. So much higher tax for these. So these are just tentative rates. Let us wait. Now the GST Council will be coming out with the rates. So the exact rates, the actual rates will be known then. And these rates will be uniform across the country. Only for a few items, the states will get the leverage to make changes a little, maybe for if the item rate is 18%, maybe they will be allowed for few items for 16% or 20%. So a higher rate or a lower rate may be allowed by the GST Council, but in very few items. Some items are not in GST. They'll be taxed as they are taxed in the present scenario, like alcohol for human consumption and also petrol, because they are big revenue generators for the state governments, and the state governments do not want to lose this revenue. So they have not agreed that these items should come under GST, so they'll be taxed as in the present scenario. Excise duty is there or VAT is there, so the same taxes will be levied in the GST regime also. That's a good, that's not a bad, that's a bad thing, because input credit will not be able to be taken in these cases of the taxes being paid here of excise duty or VAT. They will not be able to take the benefit of these taxes because they are not under GST. Now let us see the impact of GST on various stakeholders. First of all, the impact of GST on government. The best thing about this will be much widening of the tax base, because there will be lower threshold in this case, and also lesser exemptions and exclusions. In excise duty, in VAT, there are a very huge number of exemptions, because of which many items are not taxed. That will not be there in GST. Very few items will be there, will be zero rated or nil rated or exempt. And there will be a lot of transparency, because a high level of automation is there. Already in the VAT departments, in excise, in service tax, automation was there. But now, since they are beginning on a clean slate, the automation level will be much higher. And because a separate company, GST and GST network is there, which will be looking after all these things. Infosys is being engaged for all the technical things, etc. And since this work will be done in most of the states by the GSTN, there will be reduction in administrative cost. Earlier, each state and even center was incurring these administrative costs. Now, since these things will be more or less centralized, there will be reduction in administrative cost. Then, since dual monitoring will be there by the states and center, there will be chances that, in fact, there will be reduction in tax evasion also, because now not only the state or the center is looking to the people who are selling goods across various states or even within the state, both the center and the state will be seeing them, will be closely monitoring them, and there will be real-time matching of supplies, because one will get the credit of inputs paid, tax paid only when the supplier has filed the returns. So this will result in better compliance. No frauds will be there, whereby people will be claiming input tax credit even though the tax has not been paid. So better compliance will be there. Excise duty exemptions, a lot of excise duty exemptions were given, area based etc. Exemptions are being given. Slowly and gradually they will be gone, they will not be there, they will be phased out, and the reduction in loss to center will be there. Similarly, VAT exemptions, even they will go. which presently result in loss to states. Obviously, that will be cut, and the losses will be cut now. Regarding the impact on businessmen will definitely benefit because now we'll be having a simple tax system. One of the basic canons of a good taxation system is that it should be simple. And they're trying to make it simple, though initially some complications, etc., would be there. But in due course, down the years, let's say in 2-3 years or max in 5 years, the system will stabilize, and then we'll find that it's a simple tax system. And one of the basic reasons of this is that there will be reduction in multiple taxes. Since one GST will be there and a few more taxes will be there, the system will be much simpler. Another good thing that will happen is that there will be no distinction in goods and services. Presently, a lot of litigation was there whether the item is goods or whether the item is services, because different rates were there. That will not happen because in GST, more or less, the rates will be defined for 3 or 4 groups of items will be there, 3 or 4 rates will be there, and so this distinction will not be relevant as far as the rate is concerned. Then cascading effect of taxes that we talked about will not be there because tax on tax will not be there. We'll be able to take the final consumer, whatever he pays, the total tax will be on the basic product price. He will not have to pay tax on taxes. Then this lower taxes, since cascading effect of taxes will not be there, and the manufacturers or sellers will be able to take the benefit of all the input taxes paid. This will result in better profit margins, and this will also result in better price for the customers also, because the prices will in these cases be reduced to some extent at least. Then also uniform tax across the country, one nation, one tax. That's the slogan that Modi ji is giving. So it's not one tax and one nation, but still the taxation structure is being made simpler. Very few taxes would be there, and that will definitely. And then cross-border transactions. Presently, we are not able to sell to some states, or we do not want to go across the country because many complications are there. Many octroi has to be paid in many states. All that will go now. So again, smooth movement of goods will take place. This will result in improved competitiveness for the business, and obviously on the flip side, one-time increase in compliance cost will be likely. Impact on consumer, very important. You and me, everybody is a consumer, and consumers at large. Most products are likely to be less expensive over some period of time, because cascading effect of taxes will not be there. We won't have to pay tax on tax. But on the flip side, services, most of the services will become more expensive, because from the service tax rate of 15%, we'll move on to a higher rate of around 18 to 20%. So whether you are going to a restaurant for dining, or whether you are paying your mobile bills or insurance premium, everything will become expensive. Then even mobiles, jewelry, ready-made garments, etc., they will also cost more. What about impact on professionals, which you are most concerned, I guess? So in the case of professionals, a lot of impact will be there. So let us see. First of all, it is a very big opportunity. You just cannot think of the mammoth opportunity it is, and the kind of ways it will open, the kind of avenues it will open for you. And let me tell you, there's a lack of trained professionals. The requirement, the demand and supply absolutely are mismatching. The supply is less and a lot of demand is there. So what do we have to do? We have to educate ourselves. Without properly educating ourselves, there is no way forward. First of all, we have to educate ourselves, and then we have to educate our staff and our clients, the staff of our clients. It is for us to train all these people. And if you do not do that, there will be other people who are coming to the forefront for these training, etc. Then another big opportunity for you is impact analysis on clients or prospective clients, because everything will change in GST. So impact analysis is very important, and each and every businessman, however small or big he may be, he will want to know how GST will impact his business. Then tax planning is another major area. You can also help your clients or prospective clients in the tax planning, how planning of tax can be done in the new regime. Logistics, you can also help him to understand how logistics will change. Presently, in the case of FMCG, they may be having depots and supplies from all over the country. Will GST change that? Will it be possible to take a centralized registration in just one state, and from there we can make the supplies, or will it be essential to take a registration in each of the states, or at least few states, that you can help him to understand? Review of the existing contracts. In many of the existing contracts, the taxes and duties, the clauses may be something different, but in GST probably they will have to be revised. So you can go through the existing contracts and also advise your clients about them. Change management, how things will change in GST and how we can help him understand how the changes will be done. So change management, very essential and very difficult for the client to handle on his own. So that is also an area where you can help him. In fact, you can make a complete roadmap for your client, as it were, because from inception, from the starting, from registration, from planning, filing of returns for other compliances, it is who you have to help your clients. So a complete roadmap can be made by you for each of your clients, or some even prospective clients. You can increase your clientele like anything, because many more people will want to get your services. Once you make your mark, once you do your homework well, and once you advise a few of your clients, then the name will spread and definitely people will come to you. And compliance burden, a lot of compliance burden will be there on these businessmen, so you can help them share that. You can help them in filing their returns, etc. One-time tasks like registration, etc. will be there. Tax planning would be there. Other things, logistics, etc. would be there. But on a monthly basis, you can also help them filing returns. That work can be outsourced to you, because that's not what the businessman ideally should be doing. He should be doing his job. He should be selling services or selling goods. He should not be engaged in these compliances burdens that you can help him out. And time is very short, so let us begin immediately, just now. So that was about the basics of GST, and now let us move to registration. What we will do in registration, let us see need for registration, who needs registration, structure of GSTIN, types of dealers, migration of existing assessees, registration of a new user, and registration process. So all these things we will try to cover, and if time is short, these will be taken in next series that we will be coming out with. So first of all, we are aware that in India, as I already said, that the center is powerful and some of the states are also very powerful, and sometimes each of them want to do something which is not acceptable to the other, and that is why we have come out with a dual GST rather than a unified or a single GST. And that is why for registration also, you may be making supplies from Delhi, Chennai, Mumbai, Haryana, etc., Punjab. And if you are making supplies from these different states, then a separate registration will be required for each state. One single registration, as in the case of service tax, is not possible. Even for VAT, we used to take separate registration for each state. The same concept will follow here also. In the case of GST, a separate registration is to be taken for each state from where we want to make the supplies. Now coming to the threshold for GST, is there any limit till which we are exempt? We do not have to take a registration. We don't have to apply for registration. VAT, as you are aware, for state-wise, there are different limits. Some states have a limit of 5 lakhs, others 10 lakhs. In Delhi, it is 20 lakhs. Service tax centralized for the country as a whole is 10 lakhs limit is there. For excise, the limit is 1.5 crore across the country. What is proposed in GST is for Northeast, the limit is 5 lakhs, including Sikkim, and for the other states, it is 10 lakhs. This is for the liability of tax payment. Registration in the case of Northeastern states will take place at 4 lakhs, and in the case of other states at 9 lakhs. And the tax liability will arise at 5 lakhs and 10 lakhs respectively. For some cases, there will be no threshold. Even if you make a sale of a single rupee, then in that case, you will have to apply for registration. What are these cases? Let us see. If you make interstate sales or supplies, in that case, you have to apply for registration even if you make a sale of a single rupee. Then casual taxable persons, we'll see who these are. Then where you have to pay tax under reverse charge, as in the case of service tax. Then non-resident taxable persons, persons required to deduct tax at source. Yes, tax at source or TDS is there in GST also. Then persons who supply goods and services on behalf of others, whether as agent or not. Then also input service distributor, e-commerce operator, persons who supply goods and services other than branded services through e-commerce operators, and aggregators like Uber or Ola who supply services under a particular brand or trade name, and also some other persons who may be notified by the GST Council in due course. So no threshold in these cases. Even for a single rupee of supply, registration has to be taken. Turnover, let us very clearly understand, means the annual turnover of both the goods and services. That will constitute the total supplies. We don't have to see goods only or services only. We have to see the total of both of these. And very importantly, it includes exports and exempted supplies. In VAT, in most of the states, these were not included, but in GST, it will include exports and exempted supplies also. Please remember that. Types of suppliers. There will be normal or regular suppliers, composition suppliers, casual suppliers or non-resident Indian suppliers, input service distributors and non-resident foreign suppliers. We'll just now see who they are. Who needs registration? If you cross the threshold, or if in case of interstate supply, even of a rupee of a sale, the registration will be required. Then liability to pay as recipient of certain services, reverse charge, input service distributors. Then United Nations bodies, embassies, etc. for allotment of unique ID also they have to get registration. Then if there's a transfer of business or change in ownership of business or death of a proprietor and the business is not taken over by somebody else, in these cases registration is required. Then also in cases where there is a change in constitution of business, merger, amalgamation of two or more registered SSCs, demerger, casual dealer, non-resident dealer, and even in the cases where a person wants to get voluntarily registered. In all these cases, we need to get registered with the department. Now, the existing registered taxpayers, how they will be migrated to GST. There is a common portal, GST common portal, which will be used for registration and compliances, and it is the backward integration is there with the IT infrastructure of the center and the states, and the data from the old tax system, whether it is VAT of various states or excise or service tax, the data initially will be taken from there, because these assessees will be migrated automatically to the new GST. And let me tell you, the PAN is a mandatory field in these cases. For registration now, PAN is mandatory. You must have a PAN, and that's essential to have a PAN. Without PAN, you cannot get registration under GST. Not only the PAN of the entity or the business, even the PAN of the owners, full-time directors, managing director, authorized signatory if Indian is required. Similarly, in the case of other, so all these people with the partners, etc., they need to have a PAN, and that needs to be mentioned. In the case of some individuals and proprietorships of some northeastern states, it's not in the present law not mandatory to take a PAN, but hopefully, it seems that even for these people, PAN will be mandatory. In the final law, it needs to be seen whether that is being done or not. But it is expected that even in these cases, PAN will be mandatory. Even in the case of government departments, let us see again. Probably PAN would be mandatory, or some informal talk is there that even in government departments, TAN may be taken. So let us see how the final law comes up. In the case of non-residents, generally they do not have PAN. So in these cases, some other documents may be prescribed in lieu of PAN. So as I said, the existing registered taxpayers will be migrated to GST, and existing registration numbers, we are aware in the case of excise and service tax, we have a 15-digit PAN based registration number. In VAT or CST also, we have 11-digit state based numbers, and they have also been converted. They're also in the VAT departments, whether it is Delhi VAT or Maharashtra VAT or other VAT departments. Already PAN was being taken. That was taken only for GST. So under GST, we'll be having a number which is appearing on the right hand side. As you can see, the format will be like this. And what do all these digits mean? And there will be automatic migration to GST. So what is the structure of GST registration number? We have state-wise PAN-based 15-digit GSTIN. The number will look like something like this, based on PAN, as you can see. In greater details, if we want to understand the GSTIN, it will be consisting of 4 types of items. First will be the state code, then the PAN, then the entity code, and 1 check digit. Like first and second digits will be representing the state, the third to 12 digit or the alphabets will be representing the PAN, the 13 digit will be giving you the entity code, the 14 digit will be blank for some later use, and the 15 digit will be check digit, again not for your and my use, that is being used for computerized operations. If you want to know more, this state code is based on the 2011 census, and the codes have been taken from there. So Delhi is 7, Maharashtra 27, Tamil Nadu 33, and West Bengal 19. This is different from the codes that we have in income tax department or for filing TDS returns, etc. Ideally, the same should have been there, but they have not followed that. So please remember, we should not make mistakes either in TDS returns or in GST. Then PAN, third to 12 digit is PAN, and then next is the entity code. The single digit entity code is there. 1 to 9 will be used, and then A to Z. What is this? As you are aware, AS 17, Institute of Chartered Accountants Accounting Standard AS 17 of accounting for various segments or segment reporting. There, for different segments, we have to compute the revenue separately. So same concept is there. If you want to take a multiple registration for various business segments, that is allowed. It is not mandatory. It is voluntary. You can go for separate registrations within the state for different business verticals, but that's not mandatory. But if you go for that, a separate entity code will be there. Let's say first will be for the textile business, second will be for the petrochemicals, third will be for pharmaceuticals. So as you can see on the screen, it will be like that. "14 digit will be blank for future use, and 15 will be check digit for computerized operations." Now, the existing excise assessees, service tax assessees, VAT assessees, they will be automatically migrated to the new system. In the case of excise, generally the person will also be registered in VAT. So in that case, the department, the state department VAT data will be taken. And in the case of service tax, the service, since it's a central subject, that data will be taken from the service tax department. And only very few fields are there which will be taken from these departments, and around 120 fields are there which are there in the registration form of GST. So most of these fields will have to be filled in due course by the person. For this, the department will be conveying to the existing persons through email and SMS. Already email IDs and mobile numbers have been given in the VAT departments and the service tax department, etc. The department will also be advertising in newspapers, etc., in print media, in TV, etc. also. So they'll be asked to give these details, and also KYC details wherever required will also be asked for. Existing taxpayers below the threshold limit, they will have an option to opt out of GST. So if a person, so if the limit is 10 lakhs, in fact, there's also now talk going that this limit will be enhanced. They're saying for up to 25 lakhs, the person will not have to pay any taxes. So let us see what the final limit is. So whatever the limit is, the person can opt out of GST. But the bad thing about that will be that he will not be able to take any benefit of input taxes paid by him, and he will also not be able to charge any input tax. So that was about the existing registrants. Regarding new registration, when a person starts a new business and he wants to take a new registration, the process is more or less the same in the case of a normal dealer or a non-resident dealer or casual dealer, etc. So what is the process? Let us see. If there's a new business and supply is within the state and turnover exceeds the threshold, then a person has to register, apply for registration. And please remember that registration will be from the date of application. It will not be from a later date. It will be from the date of application. And it is important to also to note that you must apply within 30 days. What will happen if I don't apply within 30 days? If you do not apply within 30 days, then you will not get the input tax credit on period prior to that, the date of registration. And if you apply within 30 days, then you will be getting input tax credit of all the inputs that have been consumed by you. So that is the importance of applying within the date. Then voluntary registration. If the turnover is less than the threshold limit, and a normal dealer, you can apply as a normal dealer and you will get input tax credit for all supplies. Then also you can apply for a compounding dealer if you want to. So some details about the composition scheme, because many of your clients might be small retailers, etc. So this scheme is applicable for a turnover up to rupees 50 lakhs. And if that be the case, the person can opt for compounding scheme. And he does not have to apply every year. Once he has applied as a composition dealer, year after year, unless the turnover exceeds this limit of 50 lakhs, he can continue as a composition dealer. He will not be able to take benefit of any input taxes that is being paid by him on the supplies received by him, and he also cannot charge any tax from the buyer. But he will have to pay a tax at a specified rate, which is minimum 1%. It may be 2% also, but minimum it will be 1%. If you want to change from a composition dealer to a normal dealer or a normal dealer composition dealer, that can be done. As you can see, from a normal to compounding dealer, you can change from on the first day of the next financial year. An application should be made before 31st March of the preceding year. From a compounding to a normal dealer, that can be done during the year whenever the sales exceed the prescribed limit. And from the compounding taxpayer crossing the threshold that I talked about, automatically he will become a normal dealer from the day of crossing the limit. And the number will not change, the GSTIN will not change, the same GSTIN will continue. Then different businesses. The petrochemical business will also be there. Let's take the example of Reliance, and it has petrochemicals business, textile business, infocom business. Then different kind of businesses are there, and here if it wants to take separate registration for different business verticals, it can take that. And but in fact there's no use for that. It's not beneficial and it's not mandatory, so ideally one should not go for that. And because they'll be considering it as a single entity for the purpose of recovery, and there will be no input tax credit if there are no supplies, and also unnecessarily confusion will be there, multiple returns and assessments will be there. So presently I do not see any foreseeable benefits in this multiple registration, so one should not go for that. So I think time permits us for this only, and now we will conclude this session. The basics we'll now talk about, and if time will permit, and definitely we'll be having many more sessions like this where we will be discussing more things regarding registration, regarding returns and other things also. So I'd like to conclude this session with a final word. The process is very computerized. Most of the things will happen online, whether it is payment, whether it is registration. In the case of existing dealers, it will be automatic. So quite easy for the people involved. Minimum physical interface will be there, so no issues of corruption and people harassing you, so that will not be there. A robust infrastructure, IT infrastructure, a huge IT infrastructure is being set up. There will be a seamless transfer to the GST regime, hopefully, though I guess some teething problems will be there, but I think the department is quite geared up and they'll be taking necessary steps for that. And the data verification and validation will be there initially, because the data coming from the VAT departments or the service tax department, probably the data will not be sometimes be correct, or the complete data will not be there, so that checking and validation initially will be there. And the process of registration is also quite simple, and time bound approvals and actions will be there. And for smaller people who do not have that capacity, paying capacity to engage big or medium sized professionals, there's also a compounding scheme, so that the compliance burden is reduced, and they just have to make the supplies and charge a small percentage of tax, around 1%. So that's for them. And there's an easy exit scheme. If you want to exit from if you want to deregister, etc., then also the process is simple. In fact, when I see all the things that the department has done, they have done their homework quite well. I think it is you and we that we are lacking in understanding or educating ourselves about GST, but the department, everything is being crystal clear, as it were, and practically things are being done, and in some time even the migration will start to GST of the existing assessees. The testing will be there, the messages will be there to the assessees, etc., to make the changes, to update the various fields which are not updated in the department's database. So all that will happen. Then the testing of data will begin from, let's say, around January, February and March, as we are eyeing for a 1st April 2017 date. So let us prepare ourselves, let us get ready, let us tighten our seat belts, because without that things will not be possible. And we at Webtel will definitely be trying to educate you with various means, and this webinar is one of the ways that we have tried to reach out to you. And we have also launched our GST e-learning series, whereby we'll be talking about GST in much greater detail. And this GST e-learning will be available to you to learn at your pace, speed and convenience. This data, this material will be available to you on your PC or your laptop, and there, whenever you want, you have the time. Whenever you want, you like, you can go through the various modules. The various chapters will be there: GST overview, returns, registration, place of supply, time of supply, payments, refunds, and various experts will be involved to give various e-learning modules to you, and also question answers will be there. There will be sometimes we'll be organizing webinars whereby you can also ask questions, etc. Even the queries you can send by email, and many more things will be done. The GST GAN series has been started for you, whereby we are sending messages of small and crisp, brief messages, whereby you can learn the GST concepts in a very simple and easy manner. So we are doing all these things, and we also invite suggestions from you, whatever more you like to learn about GST and how you like to learn about GST. So you can go through the sample GST e-learning series, which is available on YouTube. And if you like, you can subscribe to it. We can also subscribe to our channel. And definitely the learning will be easy. I guarantee you that. But you have to make the first move. We have made the first move, but now this next move has to come from you. You have to devote some time to study GST, to understand GST, to grasp GST, and then get trained on GST, and then start training other people on GST, studying impact of GST on your clients, on your prospective clients, and then become an expert on GST so that people are after you. Everyone is after you to for training, for impact analysis, for compliances, for so many things. So a very happy GST learning to you, and thank you very much for your time and patience. Thank you. So first of all, thank you very much for a very overwhelming response. And now I have some question answers. I'll like to take them up. One suggestion is that the training should be given in some particular location. So people want physical training also. So we'll try to work that out. And then somebody has also asked that he wants a class in Hindi. So definitely we'll try to do something regarding Hindi classes or the learning in Hindi also. And then somebody is asking by which month will it be applicable? See, the expected date as of now is 1st April 2017. That is for the April month. April 2017 will be the first month when this GST return will have to be filed. The department is trying its level best, but this is a difficult target. Hopefully it will be achieved. But even if there is some slight delay, things will happen this way only, and maybe a few months delay could be there because of technical reasons, because of some legal issues. But in any case, it is coming in 2017, and let's say early 2017. April 2017 is a probable date. So the government is trying all its best to ensure that GST starts from 1st April 2017, and that is why we have to prepare ourselves for it. There's no time left. Some people say there's still time, we will try and do things later on, but it is already late. And if you still take time, it definitely will be detrimental to your health. So please start right now. Then somebody is asked about the registration process. I think I've already told some things about registration. In subsequent series, etc., I'll be talking in greater detail about registration. One will be the automatic registration, wherein the existing assessees will be automatically transferred to the new regime of GST. They'll get automatically temporary registration numbers of GSTIN, which will be converted to final registration numbers once the entire data is being filled by the assessees, and the relevant documents, if any, they are uploaded by them. And for the new registrations, the process will be different, which we'll be talking about in subsequent webcasts. Regarding limit for registration, as I already told you, in the Model GST Act, they are talking about the limit of 5 lakhs for the northeastern states, including Sikkim, and 10 lakhs for the rest of the country. This is the limit for levy of tax. but registration will have to be taken at 4 lakhs for northeastern states and 9 lakhs for other states. It is similar to something which happens in service tax, where again we have to take a registration at 9 lakhs and the tax paying begins at 10 lakhs. Regarding the GST rate, as I already said, this GST Council will very soon be formulated. As you might be aware, that President has already given his assent to this bill, and now the GST Council will be constituted, which will be taking care of all these rates, etc. Other issues like who will do the scrutiny, who will do the assessments, and various other things the GST Council will decide. But presently, what the talk is going on, what we hear in the news items, etc., the rates around 18 to 20% they are considering the standard rate, and for some essential items like food grains, etc., a rate of around 12% is expected. For precious metals, the rate may be around 1 or 2%, maybe a little more also, again to be decided by the GST Council. And for some sin items, which generally one should not consume, like tobacco products, like pan masala, etc., cold drinks, etc., there they are proposing a sin rate of around 40%. So approximately these will be the rates. And then somebody has asked me, is GST applicable for financial year 2017-18 onwards? So definitely it will be applicable in financial year 2017-18 onwards. The delay could be there for a few months, but otherwise it is crystal clear that this will come in 2017, and so that is why we must prepare ourselves for all these. And how much preparation you have already done for GST? There are so many things, there are so many finer points which you need to understand, which you need to learn, and then advise your clients. Now take for example regarding registration. Presently, your client might be registered in several states. Now, whether a single registration, let's say from Delhi, will be sufficient? Because now one nation, one tax. They're saying that though there will be several rates of taxes, but still the physical boundaries will go as it were. And one can sell in different states without worrying about the rate, etc. Because generally the rate will be same in all these states. So whether we need to have warehouses in several states, go downs, etc. in several states, or whether single registration in Delhi will suffice and from here we can send the materials. Logistics, again the transportation will be faster because these octroi checkposts will not be there, some flying squads, etc. will be there. So whether do we need to negotiate the transport rates with the transporters? Have you advised your clients about that? Then I'm having several go downs all over the country and in the bigger cities also. Reality is so costly, you are aware. Purchasing or renting, it is so expensive. So whether we need to revert that, whether we can have big go downs at some smaller places, which will definitely be cheaper, or we need to continue with the present practice. All this has to be worked out. What impact GST will have on the working capital requirements of your clients? Have you worked that out? Is that not necessary? Will it have any impact? Definitely it will have an impact because the raw material costs again will change. Since the cascading effect of taxes will not be there, that is why the products, even the supplies, even the raw materials will become cheaper. So should we not negotiate with our vendors? Should we not screen our vendors? Can we buy products from anybody? If he does not file the returns, if he does not pay the taxes, we will not get the input credit. So a process of screening of the vendors is also necessary. So there's so many things which we need to understand. Have you done the impact analysis for your clients? What impact GST will have on their business? Raw material requirements, vendor screening, whether multiple go down should be there, whether multiple registration should be there, what impact will it have on the business once the rates also come. Presently you are levying, in the case of services, 15% rate, Now if the rate is 20%, so whether you will be able to increase the cost of the product to that extent or the service to that extent, or you'll have to absorb some of it. So all these things have to be worked out for the client, and client is not able to understand these implications which you and me can understand. But उससे पहले आपको डिटेल में जाना पड़ेगा. And as I recently said in the GST tutor group on Facebook also, that jago ya bhago. Yes, you cannot just stay still. And if somebody tells me that abhi jaldi hai, abhi to kar lenge, dekh lenge GST, so I do not understand how somebody can utter these words at this crucial moment. It is already quite late. If we have not started as yet, अगर हम अभी भी तैयार नहीं हुए या शुरुआत नहीं करी हमने GST समझने की, उसके फाइनल पॉइंट्स को अंडरस्टैंड करने की, it is high time we do it now, because otherwise it will be too late. So please do not wait even for tomorrow. It is just like exercise. Every day you'll think that I'll start exercising from tomorrow. No, it has to begin today itself. आज कुछ ना कुछ जीएसटी का पढ़ना है आपको, किताब है तो उसमें से from the book either you have to see or some model GST app or some video, whatever, even the introduction is available on YouTube that I've given, or if I'll try and put this recording also on the web so that even later on you can see it. And then the GST e-learning series has been launched for you only. We'll be conducting physical classes also because a lot of demand is coming for that also. Some written material also we'll try and to bring for you. So we are trying everything which will help you understand GST in a very simple manner, in a way which you can understand, and things will definitely work out for you because it is such a big opportunity. How can you ignore it? And not only the people who are in profession for quite some time, obviously they have a lot of expertise, lot of experience that will definitely help them, and they must learn GST also, because without learning GST the way forward is not there. But at the same time, for the new entrants, for young chartered accountants, company secretaries, etc., and other professionals who are entering the profession, or who have entered the profession in the last 2-3 years, it is a mammoth opportunity for you. You just cannot imagine the kind of revenues it will generate for you, the name you can create for yourself in this arena of knowledge. People will know you definitely, and with knowledge comes experience, expertise, and revenues will definitely follow. So just get started, because nothing like this has happened before, and probably nothing like this will happen in future. It is one opportunity which none of us, not even a single person, can afford to miss. So please start right now, and I'll definitely want your feedback on this webinar, because this will help us decide on a future course of action, what more you want from us. We at WebTel are always trying to educate you through different means, and since so much demand was there, that is why this webinar has been launched. So much demand was there, that is why this e-learning series on GST has been started. And what else you want? Come to us with suggestions, come to us with queries, even the email ID, etc. That has been provided to you. That is contact@gstinindia.in. I repeat the email ID, contact@gstinindia.in. So you can mail your suggestions and what more you want from us at this email ID. So thank you very much for a very patient hearing. Keep coming out with suggestions, etc. We'll be eager to receive them from you.